Welcome everyone to another webinar with Access Mutual Fund. My name is Aditya Tripathi and I'll be your host for today. Well, this is not just a conventional webinar, but factually a 10-year celebration for Access Small Cap Fund. Access Small Cap Fund has turned 10 recently, and we feel this is the best opportunity to celebrate with our esteemed investors. So let's not wait further. I would like to invite our speaker for today. We have with us Mr. K R Hariharan, who is the segment head for learning and development in Access Mutual Fund. And he will tell us all about Access Small Cap Fund. Over to you, Hari.
Thanks, Aditya. Namaste, namaskar, and good evening to all of you. First of all, please pardon me. I am wearing this black color goggles because I've been diagnosed with conjunctivitis, and therefore doctor has advised me to wear this black glasses. So pardon me for that. As Aditya mentioned, it's celebration time. We just had the New Year celebration, and I think it is only apt that we celebrate the 10th anniversary of the Access Small Cap Fund as well. First and foremost, so let me sort of extend the New Year greetings to each one of you and your family members. And before we get to the Access Small Cap presentation, let me take the opportunity to sort of give a quick glimpse of what the markets have done in the last 1 year, which is calendar 2023. If you go back to 2023, when we started, there were talks of growth slowing down globally. And initial months, of course, we also saw that we had a couple of bad news that came up. One was that the Edinburgh report on an Indian conglomerate. Then, of course, we saw that there was a collapse of the US-based bank. And in between these two episodes, we had the budget. Fortunately, that budget turned out to be a pro-growth budget, and that sort of cheered the markets for some time. Post quarter one, we saw there was a strong recovery in the markets, which was fueled predominantly by domestic earnings. And we also saw a lot of FII interest in buying. US also sort of reported good quarter one data, sort of to allay the fears, of recession, which we started with, that there could be a recession in the US. But those sort of got allayed because of the good GDP numbers. India also on the other end also reported good quarter one GDP numbers. Then, of course, we had the Hamas and the Israel conflict. And very recently, we had the favorable state election with the incumbent party winning in 3 states. This, of course, was followed by a very dovish statement by the US Fed to sort of conclude the year. Overall, if you look at it, globally, we had high inflation pressures. There were rising interest rates. Central banks over the last 1.5 years have been aggressively hiking the rates to control inflation. There was volatile crude prices, and there was also continuous geopolitical uncertainty. Most of the countries participated in the spectacular rally that happened in the equity markets, led by the US, barring China and Hong Kong. Obviously they remained laggards because of poor and slow economic data and recovery. As we usher in the new year, India is sort of emerging as a growth engine for the world, with resilient macro, very favorable demographics, structural reforms that have been taking place in the country, and sustainable demand. 2023 was a very good year for India. Very strong inflows that came in from FPIs, DIRs obviously continued the buying, very strong macro data, and inflation was controlled. FIIs, for the matter of fact, injected about 1.7 lakh crores into the Indian equity markets in the year 2023. Now, what happened because of all of this? The Nifty and the Sensex delivered approximately 18% and 19% returns. Fantastic returns. Nifty mid cap delivered about 45%, and Nifty small cap delivered more than 50% returns. From the sector perspective, capital goods, infra, realty, and auto delivered more than 40% returns in 2023. From an investor sentiment perspective, investors sort of flocked into mid caps and small cap funds based on past returns. Many of them sort of wanted not to be missed out, which we normally call as FOMO, the fear of missing out. They participated in the mid cap and the small cap rally. I talked about the small cap index delivering 50% returns and above. Small cap funds added the most number of folios last year with 68 lakh new folios which were added, which was a 58% jump as compared to the previous year. Now, not just the folios, even the net inflows that came in 2023, almost 37,000 crores of net inflows happened into small cap funds. Overall, in the equity space, we had 1.6 trillion money which came into the mutual funds. So roughly about 24-25% of the money came to small cap. And it's therefore no wonder that everybody is talking about small cap funds, right? And it is only apt, as Aditya talked about, that Axis Small Cap incidentally also completes 10 years. So with that context, let me take you all through the Axis Small Cap Fund. I think we have, before I even start the presentation, this fund has been the track record for more than 10 years, and we have been able to deliver good performance, given the fact that we typically run a high quality portfolio. Right. So when we look at small cap, just to give a brief context, there is a definition that sort of is existent in India today in terms of what constitutes the large cap, mid cap, and the small cap. And by definition, which is a SEBI definition, all those companies which are ranked 251 and beyond in terms of the market capitalization, for the sake of benefit for all of all the people, market capitalization is nothing but the number of shares multiplied by the current market price of that share. So on that basis, 251 and beyond, all those companies are categorized as small cap companies. And as I talked about in my initial comment, when you look at the returns that large cap, mid cap, or small caps have delivered, you will find that over the last several years, and this has been the trend, across different time periods, you will find that mid caps and small cap generally tend to outperform large caps over long periods of time. Especially if you look at small cap, you will see that out of so many years that we are displaying on the screen from 2013 to 23, small cap funds have been number one performing funds for about 6 years, and that is what attracts small caps, and investors to come and invest into small cap mutual funds, right? Now, but very important thing that we need to remember when it comes to small caps is the fact that the mortality rates is very, very high in small caps. What we are showing here is basically when you look at the categorization, which I refer to as large, mid, and small, many of these companies sort of migrate from one bucket to the other bucket. So a small cap company is typically expected, some of these companies are expected to move from a small cap to become a mid cap, and some of the mid caps are expected to become a large cap. So what you see is data of 10 years, and what you see that I'll specifically spend time on the small cap piece here, is that when you look at 250 companies, which were part of the small cap that we are now looking at, out of those 250 companies, so these were 250 companies which were small cap 10 years back. Out of those 250 companies, one company has gone on to become a large cap in the last 10 years. 11 companies have gone on to become mid cap companies, and 198 companies continue to remain as small caps. But there's 40 companies which over the last 10 years have either got acquired or got delisted. And this is the mortality that we're talking of. Now, if I were to sort of connect this to cricket, you know that in India, cricket is a religion. Everybody, to a large extent, aspires to become a cricketer. And thanks to IPL, there are so many players, talented players who get an opportunity to showcase their skills and capabilities and talent. But very few out of this actually go on to play for India. And even when you look at playing for India, there's so many players. I was looking at some data that we roughly had about 1,200 individuals who actually went on to represent India in the last 90 years. Okay, and some of them actually played for 1, 2, or 5 matches. So very similar to the cricket context, a lot of aspiring players want to go to the highest level, but sustainability is a challenge, and some of them are not able to do that, and they sort of are no longer able to participate in the national cricket team. From that perspective, I think small cap also represents such potentials and opportunities. right? But some of these opportunities don't pan out in the future. Some of these opportunities will pan out in the future, but when they pan out, the rewards are extremely super. And that's what makes small cap investment very, very exciting, right? Other advantage, that when we look at small caps, and this very important slide that one must consider, is that typically when you look at the large cap, the spectrum of industries that are covered in the Sensex or the Nifty, you will find that they are dominated by financial services and maybe IT. So if you look at IT and financial services, roughly about 47-48% is the service industry. And this is where small cap as an index provides a very good opportunity for investors. So large caps, if I were to look at is, typically are the service-based ones. But if you were to look at the winners of the future, I think many of these winners will come from the small caps. Now, what are the kind of segments that you get an exposure to? Just to give a look at one or two of them. Look at capital goods. If you look at capital goods in the large cap space, which is Nifty 50 index, you will find that capital goods has a very, very small representation of 1%. But when you come to a small cap, the capital goods has a representation of almost 14.5-15%. Now, when we talk of the future winners, and given the context and the economic backdrop of the country today, India has predominantly been a service-driven economy, but I'm sure many of us would be listening and seeing so much of news and articles on how India is positioned to become the manufacturing hub in the future. And we are talking of the Amrit Kal period for India. And I think if that period were to take place and happen in the future, I think it's important to look at small cap as a segment, because this is the segment which holds a lot of promise in terms of future economic growth. Similarly, if you look at some of the other more sectors, where you get a better representation like chemicals or maybe healthcare, you will find that they're more better represented in the small cap space as compared to the large cap. Now, what it means for an investor is that when you create a portfolio of mutual funds, right, it's important to have a reasonably good amount of mix of large caps, mid caps, and small caps, right? Because you get a representation of the economy at large. If one were to only focus on the large caps, you restrict your ability to participate in some of the growth stories of the economy. Right? So this is where it is. And if you look at the number of stocks to choose from, and this is the data that we've been looking at, excluding the financials. If you look at the Nifty 500 space, and we are looking at companies, again, because as I started with, we have always been focusing on quality as an investment philosophy at Axis. And therefore, from that perspective, one of the parameters that generally take into consideration is the return on equity. So if you look at the 500 index, all those companies which generate an ROE of more than 15%, look at the number of stocks, in the large cap, mid cap, and the small cap. I think this is again an important point, because a lot of people, especially in today's context, are worried that small cap में बहुत ज़्यादा rally हो चुका है, it is overrated and so on and so forth. While the valuations might be expensive, I don't think we are in the bubble zone, and therefore it is important that we look at quality when it comes to investing in small caps. And therefore, the universe that is available is reasonably good, and therefore the spread of stocks that is available when you participate in the small cap is reasonably more diversified. And therefore the opportunity to generate alpha as well, because if you look at the base is reasonably large of small cap companies, and that is where that filter is very important in terms of adding and subtracting companies, right? So that filter mechanism is very important in terms of what do you choose. Just as the cricket, again, there's a talent pool that's available. There's so many aspiring cricketers. Not all of them will be able to represent India and maybe become the captain of the country. But we've also seen in the past that a lot of cricketers who come from very, very small places, a very small town, have actually gone on to even captain the country, right? And won World Cup matches. So those are the opportunities that are available in the small cap space. The base is large, and therefore the ability to identify those potential winners is very, very important. Because the other thing that happens, especially with small cap, and I will spend some time in some of my subsequent slide as well, is that some of these stocks are under researched, And that is where the opportunity lies in picking them well before most of the market players will be able to find it out. Right? In terms of the dispersion of returns, again, this while I'm showing this as part of the small cap, this applies across most of the market caps. When you look at a 10-year return, you will find that the small cap index has delivered about 18%. Good returns. But, so sorry. But when you look at it, out of those 250 companies, if you look at the top quartile, which is the top 25%, they have generated about 41% returns. So the top or the quality names in those 250 are the ones who have actually created a lot of wealth. But if you were to get stuck in the bottom 25%, which is the bottom quartile, you actually end up eroding money. Again, to connect it with cricket examples, so many players come and go, they play a couple of few matches, and they don't participate, and they're not taken into the national team. Similarly, in the small cap space, not all companies will go on to become a mid cap or the large cap. Some of them will be a multi bagger. Some of them will not be able to sustain. And therefore, fund management becomes important. Identifying quality names becomes important. And that is what we try and do at Axis Mutual Fund, to identify companies which could be real potential winners, and to also importantly not participate in those businesses and companies which might look promising but don't have the sustainability to remain for the next 5-10 years. And therefore, when you look at from a benefit perspective for the investors who invest in these small caps, one is the performance. Obviously, I talked about the last year data. Even if you look at historically, you will find that small caps generally tend to outperform over the long periods of time. The other thing that I partly alluded to in my comment was the under research opportunity. What do I mean by this is that when you look at the analyst coverage across the large, mid, and the small space, you will find that there are very few institutions who actually cover the small cap space. And that is where the opportunity lies. Because if I, as a fund manager, is able to spot a jewel, which none of the others are participating, because most of them are not even getting into the research of those organizations, I think I stand to gain significantly. It is like that IPL franchise, that the bidding that happens. If you bid on a particular player, and let's hypothetically assume that you have bought him at a reasonable cost as well, and that player were to go on to perform very well. And as a franchise, I think you have made a good bet in terms of picking good potential, and that potential getting realized in terms of performance, right? That is where the opportunity comes, for investment for the investment in the small cap space. But few important things that we need to bear in mind. Selecting small caps is not just enough, and that is where quality plays an important role, which is the underlying theme of Axis Mutual Fund. Whatever we do in terms of equity portfolios is based on the theme of selecting good quality companies, and which has a growth potential. Okay. Of course, there's going to be volatility in small cap, and as investors, I think it's important for them to be mentally prepared to see the ups and downs in the cycle. So let me quickly come to the Axis Small Cap Fund, and what do we do here? As I said, we look at quality, which is our underlying theme for equity funds in general. So what do we look at under quality? We want to look at businesses which have got very strong promoter pedigree. What has been the track record of the management, in the past? What is the corporate governance and is there a management which has demonstrated in the past that they are able to execute and deliver performance? And some of the fundamental parameters that we look at is to look at return on equity and return on capital employed, because this sort of helps us to gauge whether the businesses are run efficiently. The second important thing, especially in a small cap, which is very, very relevant and important, is that is the business having a model that can be scaled in the future, so that you're able to generate returns, in the next 10, 15 years, 5, 10, 15 years kind of period. Because again, a lot of businesses might show promise, but do these companies have the model to sustain over long periods of time is very, very important for one to look at, when it comes to the small cap space. And third is what is the stability of the business in terms of the balance sheet? Does it have the ability to withstand some of the shocks, right? And what we also talk about is that what is it that we avoid? Just as I talked about the filter, what you add is important, but what you eliminate is also equally important. I'll just quickly take 1 or 2 years without naming the companies. So what we try and do and avoid is that, just to sort of give you some examples, there was a company which was a beverage manufacturer company in the small cap space, which had certain governance issues. While the business might have looked very promising, we did not take a call in this business, right? Similarly, you look at an auto component company, which was a single product company, and therefore the question of scaling up the business over the next few years was a challenge. And while the immediate business potential looked very nice and attractive, the medium term to long term did not sound very good, and that is why we sort of did not participate in this story. Similarly, when you look at a retail private sector bank, there was governance issues. There was a moratorium that was imposed, and therefore we did not participate. So ESG filters is what we typically employ. We look at what is the quality of the management, what is the kind of leverage that is there in the company, and are there any challenges with regards to its driving the business and the promoter. So these are filters that we employ so that the portfolio that we create is a good, sound quality business portfolio, so that the investors get an opportunity to participate in the uptrend. Importantly, do not have to face too much of volatility in terms of performance. Just to sort of quickly take you through, this fund is managed by Shreyas, who also is our head of equities, and of course Mayank and Vinayak also support him. Very important point that I would want to talk about, especially in the context of where we are today. As I said, FOMO is a principle that is applying to a lot of investors. The fear that you did not participate in the mid and the small cap space last year, and therefore you want to jump in to small cap mutual funds today. While we would not say that you should not get into small cap, but important is from an investor perspective, whenever you get into small caps, irrespective of you getting today or after 1 or 2 years, it's important to look at a long period of investment. And typically we advise investors to stay for minimum 7 to 10 years in a small cap mutual fund. In terms of the allocation, as per SEBI categorization, minimum 65% of the money has to be into small caps. And what we have done currently, we have about close to 70% of the money into small caps, about 2.5% into large caps. We also hold about 10% in cash. In terms of the changes that we have done to the portfolio the last 1 year, we have done these changes, and I will not get into stocks because we are not advised to discuss stock, but broadly, this is what we have done in terms of the addition to the portfolio and what are the kind of stocks that we have sort of either reduced the exposure or we have exited. So what we want to communicate here in this slide is that, a small cap investment does require the fund manager to be on the toes in terms of getting in and getting out of the business. And that is what we want to sort of demonstrate and show that, we have been doing this on a consistent basis. In terms of the current portfolio, if you look at the top 10 stocks, these are the top 10 holdings that we have. The top 5 sectors are financial services, healthcare, capital goods, auto components, information technology. So again, just to sort of go back to my initial discussion, by participating in the small cap space and with specific regard to Axis small cap, you get an exposure that we have 13% exposure to healthcare and capital goods and auto components. So again, some of these spaces, capital goods for that matter, just to sort of also talk on this point that we have seen that in India, predominantly, we have been talking about capex, and we have seen that the government has been doing a lot of the heavy lifting in terms of capex, in terms of spending money on infrastructure, roadways, railways, etc. And I think the platform has been set now for private capex to really pick up, because capex is a story in India. many of us have been hearing for so many years. Ki abhi aayega, abhi aayega. But I think the time is ripe for the private capex to really show its worth. And I think a lot of initiatives that the government has taken. So some of the initiatives, again, especially with regards to the manufacturing space, government has taken in terms of Make in India. You look at the PLI scheme. I think all of these are in a way going to help some of the smaller companies. Just to give you some context, the PLI scheme, which was launched in 2020, and I was looking at some data as on 31st of March 2023, close to about 670 applications have been sort of approved by the government. And out of these 670 application, close to about 170 odd companies are basically companies in the MSME space, the small and medium enterprises. And cumulatively put together, they have been able to add about 3,25,000 new jobs, and we have been able to export about close to 3 trillion. So that's the kind of potential that an initiative like PLI offers to India and India manufacturing. Again, from the manufacturing perspective, we have taken a lot of initiative there, especially some of the areas, again, government initiative in terms of defense, in terms of the PLI, in terms of the Make in India. I think these are the themes which, in a way, is going to benefit the small cap space, and that is where investors also get an opportunity to participate in the future of the economy, right? In terms of performance, I think we have been doing fantastically well. Given that the fund has a track record of 10 years, you will see that, so this is the performance sheet as is stipulated by SEBI to demonstrate. But typically, when you look at it, you see that 10,000 rupees, which was invested at inception in November 2013, the value of this investment would be about 97,000 rupees. So effectively, we are saying that an investor in small cap fund would have multiplied his investment by close to 10 times in 10 years. And that's a phenomenal track record that the fund has delivered. In terms of CAGR, that translates to about 25% per annum, right? And clearly it has beaten the benchmark quite handsomely, which is one of the reasons why people want to invest in the mutual fund. So from a long-term perspective, a fantastic track record, that the fund has demonstrated. And importantly, the last 10 years has also seen lots of ups and downs in the market, a lot of episodes that the market has given us. And therefore, the fund has also demonstrated its performance across different cycles, right? And that's important because when you look at the track record, you would want to see a fund, which has demonstrated across different market cycles. From a SIP perspective, these are again some of the data points. 10,000 rupees of SIP started at inception. So we will have about 12,20,000 that would have been invested. The value of that 12,20,000 is roughly about 40 lakh rupees. Again, when you annualize the return, it is about 22% return. And clearly, again, it has beaten the benchmark quite handsomely, even in an SIP. So I think I will stop here, Aditya. And if there are any questions, we can sort of take those questions. So sorry.
Thank you, Hari sir, for all the information that you have helped us out with small cap. There are few questions from the investors. The first is, what will be the value of 1 lakh rupees invested at inception in Axis Small Cap Fund as on date?
Okay. So as I talked about, we showed the illustration with 10,000 rupees. That 10,000 has become about 97,000. So yours was 1 lakh, right?
Yes, sir.
So that 1 lakh would have become about 9.7 lakhs. So almost close to 10 times, the investment. And annualized, as I said, it is about 25% returns.
So we do have another question from Utkarsh, and he's from Ahmedabad. So Utkarsh wants to know, how do small cap mutual fund provides opportunity for growth and higher returns?
Okay. So as I said, small cap companies are companies, which are ranked 251 and beyond, in terms of the market capitalization, because these are companies which are relatively, I would not use the word new, but relatively small. And therefore, not many people are aware of the potential that exists in these businesses. And therefore, as a fund manager, if one were to go and identify such businesses, which we call as potential jewels, I think there's a lot of money that can be made, because the growth is tremendous, and one can generate a subsequent amount of wealth, in terms of investing in these kind of funds. So identifying the right stocks. Please remember, it is not that easy, because the universe is very large. We have so many stocks to choose from, and therefore, if a fund manager is able to identify the right set of companies and businesses, I think there's and some capital appreciation that one can generate. And therefore, you will also see that most of the time, Aditya, some of these companies, actually do well. They're called as multi-baggers, because typically you'll find multi-baggers coming from the small cap space.
So specifically, I actually wanted to know, like, what are the specific characteristics or factors that make small cap mutual fund attractive to investors?
So one is, as I said, the growth potential that exists in terms of wealth creation, the very high growth potential, and therefore, from an investor perspective, very high return potential as well. Two, because as I said, that this is a company, this is a segment which is largely under researched, and that is where, and typically when you look at the stock market, you will see that it works basic on the basis the supply demand. So if there's a small cap company which is not recognized by a lot of people, typically you'll find the demand for this company will be low, which means that these companies would be trading at a lower price. And therefore, if I were to identify that company, pick it up, so I enter into this company at a lower price, and I stay invested, the business grows. As more and more people start coming to know the business, the demand for that stock goes up, and the price sort of keeps going up. And obviously, the business also has to do well. So both of them together will take the prices to much higher levels, and that is why I make that return. Two, one must also not forget, Aditya, that one of the slides that I showed, that we have the universe of stocks. So some of the large cap companies which are there today as large cap would have been a small cap or a mid cap company in the past. I think that's the potential that exists today, that some of these small cap companies will go on to become the mid caps and the small cap and the large caps of the future. So these are some of the characteristics that make a small cap, really, really attractive for the investors.
I have cleared my doubts. Eventually, there is a question from Saurabh, and he's from Delhi. And I think he has a question of how does investing in small cap mutual fund contributes to diversification with an investment portfolio?
Okay. So again, one of the slides that we talked about in terms of the exposure to different segments that you get in large cap and the small caps. Clearly, from a wealth creation perspective, we always talk about diversification, right? And it's very, very important. It's a proven strategy to make wealth in equities. And when we take exposure to large cap, basically you are investing in good, sound, quality businesses, companies that have already demonstrated track record, and therefore, from a return perspective, I think the potential to earn fantastic return does not exist. But if I were to pick a small cap company which is underrepresented, under-owned, under-analyzed, I think the ability to generate returns is far, far superior. Two, from the construct perspective, we talked about large caps. The kind of experience and the exposure that I get is typically IT, financial services. So about 47% of my exposure is into service industry. But the moment I start participating in the small cap space is where I get an exposure to sectors which are not really part of the large cap space, chemicals, manufacturing space, automobiles. These are the kind of exposure that one could get, capital goods for that matter. And in today's context, given the fact that everybody is talking of India going on to become a giant, in terms of economy in the next maybe 10, 15 years. And as I also said in my presentation, that the future contribution to the GDP might not necessarily come from services, because manufacturing is one of the areas that government is very keen to push. A lot of initiatives government has taken, and I think all of them is sort of going to augur well for the small cap space. I think from that perspective, diversifying becomes important. Please remember that no point in time do I want to communicate that you should exit large caps and get into small caps. We are talking of diversification, which means you need to have all of these in combination. So it's like a Rahul Dravid and a Sehwag both in your team. So Rahul Dravid is a large cap giving you consistent, stable performance. You need a Sehwag in between, to really give those kind of aggressive returns.
So I see we have another question from Karthik, and he's from Delhi, and he's been asking how much allocation should an investor take to a small cap mutual fund, according to you?
So this is very subjective, and it would depend on what is the goal of the investor, what is the time period of investment. So just to give you a context, somebody is, and again, obviously the risk profile and the appetite of the investor. So if some were to be, say like you, Aditya, very young, maybe 25, 30 years old, and you are wanting to plan for your, say, retirement, which could be another 30 years down the line, and you also, by virtue of the risk profiling that we do, turn out to be an aggressive investor. So clearly it tells me that Aditya can take a reasonably good exposure to small cap. So in your portfolio, and therefore for young people who have the risk appetite, who are aggressive in terms of the risk profile, and who have a long period of time, investment time horizon, you can have about 40% of your exposure, 30-40% of your exposure to small caps. Again, just the fact that Aditya is 25 years or 28 years old and is planning for 60 years, 30, 32 years of investment does not mean to say that you should have 100% into small caps. Diversification is important, but the fact that you have time on your hand and the fact that you're an aggressive investor gives you the comfort to participate in the story of small caps.
So there is another question, and this is from Janak, and he's from Jaipur. And the question is, it is advisable to invest in mid-cap funds or small-cap funds via lump sum or via SIP?
My favorite has always been SIP, and especially in today's context where the markets are at an all-time high, and generally we get these questions of in this market, should we do a SIP or a lump sum? I think all the more reason for somebody to do a SIP in today's context, because SIP has a lot of benefits. One is the fact that when you do a SIP, you generally tend to invest across time periods and therefore across market cycles, and therefore you get enough opportunities to accumulate units in your mutual fund scheme when the market corrects. Now, please remember, when it comes to lump sum, the timing becomes important. When do you enter? When do you exit? Because we have seen data points where that somebody has invested in a particular scheme or a fund, yeah, for 10 years, and then your timing of entries different, your returns are extremely different. So it is important. So when you look at SIP, uh, again, as over periods of time demonstrated that it can beat lump sum. Sometimes lump sums can beat SIP returns. But I think the reason why somebody should do SIP is to avoid that mistake of wrong entry. In a lump sum, when you do the wrong entry, say let's hypothetically assume you enter today in the market with a lump sum amount, and if the markets were to correct and stay corrected for the next 2 to 3 years, which means you will see a negative impact in your portfolio. On the other hand, when you do SIP, when the markets were to correct, you get opportunities to accumulate more units, because the SIP works in that construct that as the market corrects and falls, you accumulate more and more units, and therefore you tend to benefit in the long run. Therefore, my strong advice, do SIP. What smart investors do, by the way, is that they start SIPs, and if the markets correct at some point in time in the future, and they have got a reasonably good amount of cash with them, they also do a top up. So I think that's the best combination, to start a SIP. In intermittent corrections, you get reasonably material corrections that you see, enter and put a lump sum.
So I was curious to know about it. Like how a global small cap structure, as in, is India on the right trajectory to meet global standards?
I think every country, every economy will have their own set of standards, Aditya, and this could be influenced by the local regulations. It could be influenced by the market dynamics, and it could also be influenced by the economic cycle of those economies or countries. I think from an India standpoint, there's a lot of efforts that are being taken, to align with global standards, especially if you look at the kind of work that SEBI is doing. Again, the worry typically is from a small cap, because large cap people assume that these are companies, these are big names, and therefore everything, right from corporate governance to reporting, everything is happening the way it is required. I think from that perspective, SEBI has sort of made it streamlined. Most of the things, in terms of disclosures, in terms of corporate government corporate governance rules, in terms of ensuring transparency. I think from that perspective, India has made a lot of headway in terms of the way it is structured, right from corporate governance to regulations to investor protection. I think SEBI. I think every 2 3 months we keep hearing that SEBI is trying to do something, more and more in terms of investor protection. I think they have enforced a lot of reforms to ensure that there's a lot of transparency and investor protection. I think very difficult to compare it what global standards are, because every economy will have their own set of standards. But India is demonstrating that the initiatives are taken in the right spirit, in terms of ensuring that at the end of the day, the investor is protected to a large extent.
So, any final points before you want to make about the small cap fund, sir? Any?
So I think, as I said, I speak more from a next 10-year, 15-year perspective. I talked about the Amrit Kal period for India. India's economy has been growing. It's one of the fastest growing economy in the world. And the expectation is that India will continue to be one of the fastest growing economies in the world. I think from a policy perspective, without sounding political, a lot of initiatives that the government has taken, and I keep traveling across the country, so I see a lot of reforms that have happened, especially in terms of infrastructure that we are seeing. In terms of digital, we have done fantastic job. We hold 40% of the digital transactions today are happening in India. 2020, nobody gave us an opportunity. Nobody thought that we'd be doing so much of digital transactions. I think we have demonstrated that as a country, we have tremendous potential. Look at the kind of startups that we have. Look at the number of unicorns that we have in the country. I think India is in for a really good phase in the next 10 to 15 years. And therefore, as investors, all that you have to do is invest and stay invested. That's critical. It's easy saying stay invested, but emotions will come, especially when you come to the small cap space. You will have those turbulence periods, you will have periods of underperformance. It's important as investors to stay put in those investment. And as I said, if markets have corrected materially, you've got funds, please add to your investments. Any mutual fund scheme for that matter, if you have stayed for 10, 15 years, you would not be disappointed. And Axis Small Cap Fund has demonstrated over the last 10 years that we have, across cycles, shown and delivered fantastic performance for our investors. We've been able to create wealth for investors. I think all that investors have to do is start a SIP, or whatever they want to do, add SIP, STP, whatever it is. Importantly, stay invested and participate in the growth story of the country. The country will grow, there's no doubt about it. The economy will grow, there's no doubt about it. The markets will deliver, there's no doubt about it. The only doubt is whether the investors will stay invested and reap the benefits of those of the growth story that India promises.
Thank you, Hari. I think I have made my notes on exactly understanding how I would benefit from Access Small Cap Fund, and so does, I feel, our investors too. I think we have held an amazing session with you. Thank you, Hari.
Thanks. Thank you, Aditya. Thanks always.
So on that note, thank you, ladies and gentlemen, for everyone who turned out with a healthier number and support. We will be back soon with another episode in the series. Thank you for your continued support and have a great evening.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.